Good morning, all. Today we are going to start with our next chapter, insurance claim for loss of stock and profit. This chapter is specifically an important chapter from examination point of view. In this, we will cover the concept of claim for loss of stock, in which whole loss from wherever this loss comes will be covered. Simultaneously, few examples will be covered regarding loss of stock and which type of losses are there, whether there is a partial loss which will be claimed or we have to claim the full loss. That will be also discussed. Concept of average close will be discussed today. Many illustrations will be discussed. Also, we will discuss the advanced concepts of loss of stock today. So after all this discussion, we will also cover the concept of hire purchase issues, which are advanced issues, which are normally not covered in the previous session. So that we will cover today. Starting with the hire purchase, if any student have any doubt, we would like to start with that. Otherwise, we will go for the next chapter. Beta, I have given you three questions for this. Have you done it, beta? Three questions I have been given to you of hire purchase. One was of this seventh question, whatever the number mentioned here it is. Question number 7, rapid engineering work sold to CSFIE, a machine on the cash value of rupees this on 1st of April. A sum of rupees 9,000 was paid at the time of delivery. Balance was payable in 3 equal installments on 31st of March every year. Interest was charged at the rate of 10% per annum. Purchaser charges 10% depreciation. Hire purchaser failed to pay the installment due on 31st of March. So which installment he has not paid? Here there are equal annual installments of rupees 9,000 each. So he have made the down payment on 1st of April 2011, but he is unable to make the payment on 31st of March 13. That means for he has paid the payment of 31st of March 2012 beta. So one installment he has paid and one installment he hasn't paid. Down payment he has made. So repossession has to be done and possession of the machine will be taken back. He will take back the machine which is given here and so it means for this is a complete repossession. I already discussed with you the concept of complete repossession. Beta, have you done it? It was an easy question. Answer is also given to you. I expect here you have done it because in this we have to just calculate the closing balance of our vendor account. Whatever is the amount due to vendor, amount payable to vendor, the value of asset taken over will be the same. And the simple entry will be passed, beta. The entry will be very simple. Vendor account debit to asset account. And whatever the balance sheet figure will come into your asset account, that will be assumed as a loss. So that should be 7537 beta. Good morning, good morning, good morning. Many students have sent good morning. It means for they are present. Just send your presence in the way you like so that we can see that how many students are already here. Beta, have you done hire purchase? Have you completed hire purchase? Another question was there, question number 8. In that, X Limited purchased 3 milk vans of rupees 75,000 each. Payment was to be made 45,000 down, remainder in 3 equal installments, together with interest at 9% per annum. So this is very simple because he says 45,000 is to be paid as a down payment, and the remaining payment of 1,80,000 will be divided into 3 installments of 60,000 each plus interest. Total amount is 2,25,000 for the 3 milk vans, out of which 45,000 will be the down payment, and remaining installments or remaining amount of rupees 1,80,000 will be divided into 3 equal installments, 60,000 each. At the interest rate of 9%, we have to add interest every time and calculate the amount of installment. So it paid the installment at the end of the first year, but couldn't pay the next. So leaving one milk van, remaining 2 milk vans are repossessed back by the vendor, and he is going to value it at 30% per annum. Have you got the answer, beta? Done, sir. Good morning, sir. Very good, very good. Yes, sir. Very good. So I assume that this question is also solved by the students. Next is the question number 9th according to my module, according to my notes. So there are 7 trucks on hire purchase basis on 1st of July. Cash purchase price of each truck was rupees 50,000. Company has to pay 20% of cash price at the time of delivery. That means for 10,000 per truck will be paid at the time of delivery. That means for 70,000 rupees will be paid at the time of delivery, beta. And the balance in 5 half-yearly installments. So 5 half-yearly installments starting from 31st of December with interest at 5% per annum at half-yearly rest. So 2.5% will be taken as the interest for calculation of interest because half-yearly interest is there. Beta installment will be very simple in this case. 3,50,000 is the total cash price of 7 trucks. 20% means 70,000 will be paid as a down payment. Remaining 2,80,000 will be divided into 5 installments, which are to be paid. Company failure to pay the installment due on 30th of June 2012. That means for they have paid one installment only and will return 3 trucks. Remaining 4 trucks will be retained. Vendor agreed to allow him a credit for the amount paid against these 3 trucks less 25%. This is a good question, something different from the other questions. Show the relevant accounts in the books of the purchaser and vendor, assuming the books are closed in June every year and depreciation of 20% per annum is charged on trucks. So this question is to be done by us because this is an important question having some different concept which we have not covered in our previous lecture. So let's do it, beta. Now Archie has asked illustration number 8 key repossession entry. No matters, beta. Abhi after this question we will come to that. Are you asking for this illustration number, this question number 8 or illustration number 8 of your module? Please clarify, Archie. I will come accordingly. But before that, I would like to solve this question for the students. I will not like to solve the complete question. I would like to cover the advanced concepts of this question. That is, first of all, what will be the installment? So get the cash CP of installment in this question. CP of installment is equal to, it is 3,50,000 minus DP down payment 70,000 divided by its 5 installments are there. It will be divided by 5. $56,500. This is the CP price of each installment. So it will be paid plus interest at the rate of 2.5% per installment is to be paid because he has mentioned that the interest rate is 5% in the given question, beta. So here it is given to you that company has to acquire 3 trucks and leaving 4 with the vendor, with the purchaser. So vendor is going to acquire 3 trucks, so you have to value 3 trucks. How much is the value of 3 trucks which has been repossessed? For that, he has mentioned that we are charging depreciation at 20% per annum. It has been purchased on 1st of July 2011. Now date of closing is given to you. Starting from 31st of December, date of closing is not given to you. When the accounts are going to be closed, that is not given to you. Yeah, that is given to you. Are closed in June every year. So it is again simple. If it is 31st of March, then depreciation used to be calculated differently. But here it is easy. And depreciation at the rate of 20% is charged. It is not mentioned whether it will be straight line or return on value method. It is also not required in the given question because we have to charge depreciation only for 1 year. And that will be same in both the methods. So there's no worry about it, beta. Let's calculate value of goods repossessed, beta. Purchaser So according to purchaser, I have to calculate first CP of 3 trucks, beta. It's 50,000 per truck. So it will be 1,50,000 minus depreciation for 1 year, because only 1 year is passed at the rate of 20%. So it will be 30,000 beta. It will be 1,20,000. So this is the value as per purchaser. As per vendor, it is somehow different. See, he has mentioned you specifically that vendor is not interested to value according to the depreciation system. He is just doing one thing. He says, I will assume that I will give credit of the amount paid against these 3 trucks less 25%. He is not going to use any depreciation way. So we have to calculate the amount paid in this case. As we all know that we have made two payments. One is we are making payment of principal. We are making payment of principal amount and interest. So let's understand this thing, that credit can be taken for principal only, not of the interest, because interest is a period expense or period income. Its credit cannot be taken. Its credit cannot be taken. Its credit can be taken. So it is not mentioned, but this is our understanding that whenever he says that you have to get credit of the amount paid, then you have to take credit of only the principal amount which has been paid, not the are required. So you have to get the DP of 3 trucks. It will be 30,000. It doesn't include any interest because there's no interest included in down payment. Then first installment we have paid. First installment is 56,500 plus interest. So you have to get credit of 56,500 only, divided by 7. We have to get credit of only 3 trucks which has been repossessed. It will be 56,500 divided by 7 into 3. 24,214. So 54,214 is the total amount paid till now. 54,214. This is the amount paid for 3 trucks. Just a review once again. He says, because earlier we have calculated that how much will be the installment. So installment was 7 trucks were there, no? 2,80,000 divided by 5. 56,000. So there was a mistake in calculation. Just rectify it, beta, because earlier I have not used the calculator, and without calculator there may be mistake also. It is 56,000 installment. Yeah, here it should be 56,000 beta. So 56,000 divided by 7 into 3, 24,000. It is 54,000 which has been paid for 3 trucks by us on the principal amount minus 25%. So it's 25% is 13,500 maybe. I'm correct according to my opinion, but even then I would like to check because calculator is for this purpose and we doesn't have to leave it. So this is the value as per vendor, value of repossessed goods. So loss is equal to 1,20,000 value as per purchaser minus 40,500 value as per vendor. It is 79,500 beta. Note it down. If there is any doubt, please tell me. Illustration number 8. Archie, I will like to solve for you illustration number 8 of IC. It doesn't matter. I would like to tell you the repossession entry. No problem. Sir, please explain illustration number 5 of the module. Sir, it's only 56,000. 56,000, sir. Very good. Video has been paused. No, no. तो पिछली बार भी हुआ था, ऐसा नहीं होना चाहिए. It's 56. So it is 24,000. So this is illustration number 8 of IC module. Okay, beta. No problem. We'll come to that. This is clear. This is clear. Yeah. One more thing which I would like to cover from this illustration is in the last lines he has mentioned you beta. Vendor after spending rupees 1,000 on repair sold away all the 3 trucks for rupees 40,000 beta. So till now we have not done any entry in the books of vendor for the purpose of sale of repossessed goods. So I would like to cover that also because that has not been covered in my previous lectures. So with this question, I would like to cover that vendor after spending 1,000 on repairs sold all the 3 trucks for rupees 40,000. So how it will be solved? Let's do it. Have you copied this? No doubt, sir. Very good. So in this case, we are preparing goods repossessed account. Goods repossessed account. A small account in the books of vendor. Normally demanded in the question. So you should have to prepare it. Let's do it. When goods are repossessed, first entry passed by the vendor is goods repossessed account debit to hire purchaser. So to hire purchaser, whatever the name of the hire purchaser is, you have to write here Banerjee and Company. To Banerjee and Company. And the value will be the value at which it has been repossessed by the vendor. I have repossessed it for rupees 40,500. Now after this he says, I have an incurred expense of 1,000 on repair and sell it for rupees 40,000. So when I will incur expenses, I will pass an entry go to repossessed account debit to cash oblique bank. If amount is big, you may write bank, otherwise it is better to write cash. To cash, goods repossessed account debit to cash, it is a repair expense. Then when we will sell it, entry is cash account debit or bank account debit to goods repossessed account. So by cash, it is sold for rupees 40,000. whatever is the balance, that will be my actual loss or profit, means profit or loss of vendor. Earlier we were calculating profit or loss suffered by the purchaser due to the repossession. Now this is the profit or loss suffered by the vendor due to repossession. So it is 1500 by loss on goods repossessed, which is finally transferred to P&L account by the vendor. So this is a balance sheet figure. Assume this is clear, beta. Two illustrations students are asked from me. Illustration number 8. In illustration number 8, a student has asked repossession entry बताना. बता देते हैं जी. Repossession की entry बता देते हैं आपको. In the books of purchaser और vendor मैं दोनों बता देता हूँ. I would like to explain both in the books of both. X Limited purchased 3 scooters on HP basis. Payment 45,000 down, remaining in 3 equal installments. It is obviously again 60,000. Same question is there. Together with interest, 20% is the installment. 20% is the depreciation. First installment is paid but unable to pay the next. So 1 truck is left and 2 is taken over. Depreciation will be charged at the rate of 30% by the vendor. So the entry will be very simple, but it need calculation also. So first of all, you have to calculate that how much will be the value as per vendor and how much will be the value as per purchaser, and whatever is the value as per vendor, that will be taken as a base for calculation. That you have to calculate. Have you done it, beta? Or I have to do it for you? Value of 2 trucks is 1,50,000, beta. Value of 2 trucks is 1,50,000. So vendor, purchaser, beta. CP of truck 1,50,000, which has been taken over. And depreciation will be charged for how much period? He paid 1 installment and couldn't pay the next. 3 installments. So 2 years depreciation is to be charged. Depreciation for first year. It will be 30%, 45,000. It will be 20%, 30,000. In both cases, it is return on value, beta. In both cases, it is return on value method. 20% on the diminishing balance, 30% is also on the return on value method. So depreciation for second year, beta. it will be 31,500 beta. It will be 24,000. So it will be 96,000 and it will be 73,500. Just calculate it, whether calculation is okay. Okay. It is 1,50,000 minus 30% minus 30%. It's 73,500 beta. My calculation is okay. Don't worry. And here it is 20%. So it's also okay. So how much is the difference? Difference is it's 12,500. So this is a loss. So this is a loss. An entry will be very simple in the books of purchaser. It will be vendor account debit to asset account. Vendor account will be debited with 73,500. Asset account will be credited with the same amount, and loss will be loss on repossession. That will be written off to P&L account also, to asset account. It is 12,500. Note it down, beta. Is that okay, beta? Loss is 20,500. Okay. Yes, exactly. It is 20,500, beta. It's 20,500. Very good. Any other query? Illustration number 5 is also asked by a student, Vaishali Agarwal. In this, he says, Happy Valley and Florist acquired a delivery van for 1st of April from Ganesh Enterprises. Terms are given to you: HP price, down payment, first installment, second installment, third and fourth. Cash price is given to you. You are required to calculate total interest and interest included in each installment. So this is the method in which cash price is given to you. HP price is also given to you. Down payments are also given to you. Only interest rate is not given to you. So you have to calculate how much interest is included in each and every installment. So this method is already covered by me. I have already done it for you. Now, this has been done in this case with IRR. IRR is a part of financial management. So that has been used in this case. That is a present value concept that is normally known to every student whomsoever is doing CA Inter, because it is a syllabus. It is a part of syllabus of CA Inter. So total interest is calculated by deducting cash price from the HP price. Whatever is left, we have calculated the present value accordingly. For that, we need this implicit rate. So that is calculated by using this formula. This formula is to be used in this case, but it will be actually tough if we'll do it by this method. So I have already given you the method. Preferably do with that method. It will be easy. Some calculation will be different. Obviously, amounts will be different. Answer will be different to some extent. But even then, that will be easy. If such type of question will come, you are unable to solve it in this method, with this method, because this will be of only 5 marks question. And if we have to devote half an hour on 5 marks question, then it is not feasible in the exam. I assume that my method is okay because that has been used by many books. So I would like to suggest you to use only that method, beta. For illustration 8, last entry. Illustration 8, last entry. Memon Rafiq Bhai. Last entry is regarding also X Limited settled the seller's dues. Means whatever is balance in vendor's account, that will be paid off. So the entry will be very simple. Get the balance in vendor's account, just pass an entry, vendor account debit to cash. So this is the balance sheet figure in vendor account. You may check it out. This is the vendor's account. This will be the balance sheet figure. 57th on 300 is the balance sheet figure. This is the amount which you have calculated 76 on 500. Assume it as a balance sheet figure. What he says, actually, when acquisition is made, when repossession is made, then what happened? After repossession, whatever the balance lies in vendor account, that will also to be paid off, because this is the value of the remaining assets which has been retained by us, for which we have to make the payment. So accordingly, we have to make the payment either in installments or whatsoever, whatever is a mutual understanding. That is not normally given in the question, so we are leaving that concept. We are just keeping it to balance carried down. But in this question, it is specifically mentioned, so we have to make it paid. We have to pay it. Just note it down. It is a balance sheet figure. Note the 57th on 300 is some other calculation. So whatever is balance, that is to be paid off. Number of times he says that we have made the payment after 3 months or after 6 months. In that case, interest for that period of 3 months and 6 months will also be charged by doing this thing to balance carried down, by balance brought down, by interest for the period for which payment is kept outstanding. And then when a payment is made to bank account, that's it. Sir, we can use your method now, sir. Exactly, beta, there's no problem. Sir, I have a doubt. What all accounts are to be prepared for the question number 9 which you gave? No matters. I would like to tell you, Jayant. Is that clear? Now come to my question number 9. In this, is that something is mentioned? No. So this is a basically practice question. Yeah, लिखा हुआ है इसमें, already mentioned. Show the relevant accounts in the books of the purchaser and the vendor, assuming the books are closed in June every year. So write it down with you, which accounts are to be prepared if such type of language is mentioned in the question. Important accounts which are to be prepared. Important accounts or relevant accounts to be prepared. Beta, in the books of purchaser, first of all, it will be asset account, it will be vendor account. That's it, 2 accounts. In the books of vendor, it will be purchaser account. If goods are repossessed, then goods repossessed account. That's it. These 2 are the important accounts. Let's come to our next chapter, which we are interested to do today. Insurance claim for loss of stock and loss of profit. Open your modules for this. We will do it. Beta, we have to do it. Open your module, chapter of insurance claim for loss of stock and loss of profit. Now, what is the importance of this chapter? already discussed when I have started my 3 chapters, out of which this is the last chapter which we have to cover. I already mentioned you that these 3 chapters, profit prior to incorporation, hire purchase, and insurance claim, covers normally 25% of your paper, that is 20 to 25 marks of your paper. Normally we got 5 marks to 15 marks question out of these chapters. 5 marks question, 8 marks question, 12 marks question, 15 marks question, and it is a tendency that we normally got minimum 2 questions out of these 3 chapters, minimum 2 questions. So very important chapters and very easy and conceptual chapters according to my opinion. These are assumed as the tough chapters and technical chapters, but I assume that during the previous 4 lectures, you have never assumed it as tough. It was easy for you. I assume it. Your comments also made it clear that now these chapters will be very, very easy chapters in your exam. In the same way, insurance claim will be an easy chapter for you. Otherwise, it is a technical chapter, but we will cover it in such a way that it will be a simple and easy chapter for you, beta. Second thing is you will get minimum 5 to 15 marks question in your exam also, preferably in every exam or on alternative basis. So we may assume that it is an important chapter. We have to do it very seriously. Concept is very simple, that we have to divide it into 2 parts: claim for loss of stock and claim for loss of profit. First of all, we will discuss about claim for loss of stock. Now, what means for claim for loss of stock? Before that, we should have to understand what means for the loss of stock is. So normally we come to know that fire occurs in the business or theft occurs in the business. Due to that reason, we suffered a loss. So in the market, policy is available that you can get your stock insured. Stock means whatever goods are lying in our godown. You may keep themselves insured so that if any loss occurs, then you can get claim from the insurance company. We normally assume that fire insurance is occurred, fire is occurred, but there may be any other reason also, fire, theft, or such like losses. So if any of such loss has occurred, then in that case we can claim to the company, and company will pay you the amount of loss suffered by you. But keep it into your mind that we should have to take policy in such a way that our whole loss of stock is covered. Normally, if policy is of rupees 2 lakh and average stock in godown, or maximum stock, we can say maximum stock in godown during the year is 5 lakh, then we can't claim the full amount of your loss of stock if loss occurs. So you should have to keep it into your mind that we can't claim more than the insurance value, whatever the insurance we have taken. Just wait, we would like to cover some technical points with this. You will understand these concepts also. Important points to be kept into mind. First of all, you should have to keep it into your mind. If the goods are totally destroyed, then company will pay you the complete loss, but only if you have taken the policy of that amount. And if there is a under insurance, then company will not pay you the full amount. The claim will be restricted to the policy amount. And we may assume it by an example. We may understand it by an example. Let's understand it. I have taken a policy of 5 lakh. Now, loss has been occurred and complete stock is destroyed. Complete stock is destroyed. Now, as on the date, stock of rupees 4 lakh is lying in my godown. So there is no issue. I may get claim of 4 lakh. But if stock is destroyed worth rupees 6 lakhs, then we can get claim of only 5 lakhs, as policy was taken for rupees 5 lakh only. So if complete goods are lost, then whatever is the total loss, we can get maximum amount equal to the value of your policy. or you may say value of policy or value of stock lost, whichever is less will be claimed. Let's take an example. Stock as on the date of fire is 3 lakh, fully destroyed by fire. No salvage value is there. Salvage meant for the value of stock left with us, or the value of stock which has been destroyed, which has been damaged and can be sold by us. So at whatever price we will sell it, that is called salvage value. Scrap value we can say, salvage value we can say, both are one and the same thing. So amount of policy is beta 4 lakh, first case. And your stock as on the date of fire which has been destroyed is 3 lakhs. So how much claim you will take? Claim can be lodged for actual amount of loss, and we can claim 3 lakh rupees as it is not exceeding the policy amount. If policy is of rupees 2 lakh 50,000, then we can claim maximum 2 lakh 50,000 as the policy amount is less than the value of stock value of stock destroyed by fire. So this is the complete loss method, total loss method. In case of partial loss, if goods are partially destroyed, means goods are lying in godown worth rupees 5 lakh, but goods destroyed as worth rupees 4 lakh or 3 lakh, remaining has been saved by us, remaining has been saved in any manner. So if goods are partially destroyed, then the amount of claim is equal to the actual loss provided the goods are fully insured. If the goods are fully insured, then we can claim total loss, whatever is occurred to us. But it all depends that what is the amount of policy taken by us. In case of underinsurance meant for when the value of stock lying in the godown is more than the value of policy. You may write it down with you. What means for underinsurance? Under insurance. What means for under insurance? Value of stock. Total value of stock, even you will write total value of stock as on the date of fire is more than amount of policy. This is called under insurance. Over insurance is vice versa. So is that clear? Is that clear, beta? So if it is under insurance, then we have to use average close method. Average close method is used when the loss is stock is underinsured. If stock is fully insured or stock is over insured, we can say, means the policy amount is equal to or more than the amount of total value of stock lying in our godown as on the date of fire, then average close cannot be used. Average close meant for what? We will understand it. Just wait. In this example, you may see stock as on the date of fire is 3 lakh. Salvage value is 1,20,000. Salvage you can say, save you can say 1,20,000. So what is the amount of claim if amount of policy without average clause? Without average clause means for it has been specifically mentioned in the policy that no average clause will be used. So first case is there. Policy amount is 1 lakh. Stock as on the date of fire is 3 lakh. Now tell me how much is the total loss as on the date? It is 3 lakh minus 1,20,000 because goods saved from fire is 1,20,000. So 3 lakh minus 120, this is 1,80,000. So loss is 1,80,000. And case 1, policy is 1 lakh. So if average clause cannot be used, then the answer will be very simple. if it has been specifically mentioned in the policy that no average clause is to be used, then actual loss in the given case is 1,80,000 and policy is 1 lakh. So claim is equal to 1 lakh beta. So this is your answer. If actual loss is 1,80,000, policy is of rupees 2 lakh beta, then how much will be the claim? 1,80,000. What is average clause? Just I'm going to explain that. Just wait. Insurance claim on cost price or sale price of goods. Insurance claim claimed on cost price of goods, not on the sale price of goods. Very good question. Ankur Patel. Really intellectual question. Insurance claim can be taken only on the CP of the goods. Means GP, gross profit, is to be deducted from the value of stock with us. If we have a sale price of stock, we have to reduce it by the profit included in it, that is normally GP included in it. So you have to get the CP of the goods, cost price of the goods, not cash price. Don't mix it with the HP chapter. Let it be very much clear. In this chapter, we have cost price, we have sale price, we have not any cash price. So cost price will be the value of claim. Very good question. So this we are talking about actual loss in cost price, not the sale price, sale value. So this is 1 lakh, this is 1 lakh. Is that clear? So claim is 1,80,000. 1,80,000 is loss. Exactly, beta. So in the very much clear. If you have taken a policy of 1 lakh, you cannot claim more than rupees 1 lakh. Even your loss is 2 lakh, 3 lakh or 4 lakh, but you cannot claim more than that. Let it be very much clear, beta. Now, if average clause is to be used, average clause is normally used in each and every policy, because company is not interested to suffer a loss due to the reason of under insurance by the policy holder. Normally policy holders are interested to go for less insurance under insurance reason, because in that case the policy amount will be less, the insurance premium will be less, you may say, because everyone is interested to pay less and get more. So if you are taking a policy of 5 lakhs and you are making a payment of premium of 500 rupees is paid for taking a policy of 5 lakh. Now if you will take policy of 8 lakh, obviously more amount of premium will be paid. It may be 800 or 1000, whatever, whatsoever it is. So it will be more than that. So if a person has taken a policy of lower amount, paid less premium, he can't claim more from the company when the loss will occur, because company is liable to pay maximum amount equivalent to the policy amount, and that is also if your stock is fully insured. If it is partially insured like this, amount of claim for loss of stock is proportionately reduced considering the ratio of policy amount to the value of stock as on the date of fire as shown below. See what it is. In that case, proportionate method will be used. I would like to explain you with the same example which we have discussed in the previous one. Like in the given question, if average clause is to be used, in that case, here policy amount is 1 lakh, actual loss is 1,80,000. One more thing is required: total stock as on the date of fire. How much total stock is lying with us? It is 3 lakh. Stock as on the date of fire is 3 lakh, saved 1,20,000. So one more thing is required, that is total value of stock as on the date of fire, which is lying in the ground. So in the ground we have 3 lakh worth of stock lying with us. 3 लाख का स्टॉक हमारे पास पड़ा था, 1,80,000 का लॉस्ट हो गया, क्लेम कितने का मिलेगा? अगर हमने पॉलिसी 1 लाख की ली हुई है तो प्रपोर्शनेट मेथड लगाया जाएगा बेटा। प्रपोर्शनेट मेथड कौन सा मेथड होता है जिसमें हम कहते हैं कि हमारा जो क्लेम है वो उसी प्रपोर्शन में होगा जिस प्रपोर्शन में हमने पॉलिसी ली है। हमने पॉलिसी ली 1 लाख की, जबकि हमारे पास स्टॉक कितने का पड़ा था, 3 लाख का। यूनिटरी मेथड लग जाएगा कि हमारे पास जो स्टॉक पड़ा है गोडाउन में वो टोटल इंश्योर्ड नहीं है, वो सिर्फ 1/3 इंश्योर्ड है। 1/3 का मतलब, देखो आपके पास टोटल स्टॉक पड़ा है गोडाउन में 3 लाख का, बट आपने जो इंश्योरेंस की पॉलिसी ली हुई है बेटा वो 1 लाख की ली हुई है। तो इसका मतलब है टोटल 3 लाख में से, 3 लाख में से आपका सिर्फ 1 लाख का स्टॉक ही इंश्योर्ड है। अगर आपका, हम यहां पर देखें तो 1/3 स्टॉक इंश्योर्ड है, ना कि आपका सारा स्टॉक इंश्योर्ड है। ये एक प्रपोर्शन बन जाता है। तो हम क्या करते हैं, हम कहते हैं 1/3 स्टॉक इंश्योर्ड है, तो जो टोटल लॉस हुआ है आपका 1,80,000 का, उसका भी 1/3 मीन 60,000 रुपीज आपको क्लेम मिलेगा, ना कि 1 लाख। दिस इज कॉल्ड एवरेज क्लोज मेथड। एवरेज क्लोज मेथड tells us that we have to make our stock proportionate. We have to calculate claim in proportion to the amount of policy is to amount of value of stock lying in our godown as on the date of fire. If the stock lying in our godown is 3 lakh, we have taken a policy of only rupees 1 lakh. It means for only 1/3 of the total stock is insured. So whatever is your total loss, we can claim maximum 1/3 of that as a loss, as a claim you can say. Case 1 is applicable. We are discussing about case 1 beta. In this case, case number 2, your policy amount is 2 lakh beta, and value of stock as on the date of fire is 3 lakh. Again, stock is not fully insured in this case. In this case also, you have to do this. 2 lakh divided by 3 lakh into 1,80,000. So it is 1,20,000 beta. Means to get full claim of loss suffered by us, we should have a policy which is more than the value of stock lying in our godown as on the date of fire. If value of policy is less than the stock lying in our godown as on the date of fire, I've already mentioned you maybe this thing. Under insurance, I have mentioned, yes, total value of stock as on the date of fire should be more than the amount of policy. Whatever is the loss, that is not a point of consideration. The point of consideration is the value of stock as on the date of fire. Value of stock lying in our godown. If in our godown total value of stock is 2 lakh, whether lost stock is only 50,000, that is not a point of consideration. The policy amount should be more than, okay, I have written it, total value of stock. This is under insurance. If it is 2 lakh and it is 1,50,000, this is called under insurance. So full insurance can be assumed only and only if value of stock lying in our godown, lying in godown or shop, whatever it is, value of stock lying in godown as on the date of fire is less than or equal to amount of policy. Or we can say in other words that policy amount must be equal to or more than the value of stock lying in our godown. If in the given example, you may note it down first of all, then I will go further. Note it down better. I would like to take a feedback from you that whether higher purchase chapter is fully clear or is there any doubt yet? Send me yes or no, beta. Whether higher purchase chapter is fully clear or is there any doubt in your mind? In this case, actual loss is 1,80,000. Stock as on the date of fire is 3 lakh. So the policy amount must be 3 lakh or more. If policy amount is 3 lakh or more, only then we can claim the total loss. Otherwise, we can never claim the total loss. Otherwise, we should have to go for average close method, which is already done by us. In this case also, even policy amount is more than the actual loss, but that is not considerable. That is not a point which is to be taken into consideration in this case, because the comparison will be made only and only of the policy and the stock lying in our godown as on the date of fire. So 2 lakh or 3 lakh, whichever is higher, will be the point of consideration. If policy is less than this, then average close must be used, whether loss is of rupees 1,80,000, 2,80,000, 1,50,000, 40,000, whatever it is. That is not a point of consideration. Yeah, if complete goods are destroyed, then there is no problem. Then it is very much clear. I would like to take another example for that also. Only one student tell me, Poonam, that it is clear. Tanya, clear. Yes, clear. Madhuri, fully clear. Jayant, no, sir, there are some doubts. I think with practice they will be cleared. Beta, whether it is cleared from my side or whether there are doubts from your side. If you have any doubts, I am here to clarify that there's no problem. But you should have to let it be very much clear, because in exam we can't go with doubts. In exams we can go only with the full clarification. So please let it be clear. मेमन फुली क्लियर, आर्ची यस क्लियर सर. सो बाकियों को नहीं क्लियर हुआ, बिकॉज मुझे लगता है कल हमारे पास जो लास्ट बैच था उसमें हंड्रेड्स में स्टूडेंट्स थे और अभी तक मुझे सिर्फ 6-7 स्टूडेंट्स ने लिख के भेजा है फुली क्लियर. मतलब मेरी मेहनत में कहीं कमी है. मतलब बच्चे ये भी नहीं लिख के भेज पा रहे कि क्लियर है कि नहीं क्लियर. तो कम से कम ये तो लिखो कि क्लियर है कि नहीं है. प्लीज एक बार सारा कुछ रिवाइज करवा दो बेटा. दैट विल बी डन फ्रॉम आईसी लेवल. They will give us extra classes later on and we will let you revise each and every chapter. There's no problem, but before that I would like to suggest you have 3 videos with you: last lecture and the previous lecture, and even today's lecture of approximately 30 to 40 minutes, in which we have covered higher purchase. You may please review it from YouTube or from your app, wherever the video is available with you, because videos are already given to you due to this reason only, so that you can practice it again and again. You can see it again and again. You may search on that CATube channel, Pradeep Makkad higher purchase chapter. You will get that video. You may see that or you may find it out by checking the dates. ऊपर नीचे करके आप ना एक ग्रुप 5 का इनका प्लेलिस्ट भी बना होता है, उस प्लेलिस्ट में जाके भी आप लोग चेक कर सकते हो. सर प्लीज एक बार, अच्छा ठीक है सर, प्लीज एक्सप्लेन दैट 1/3 पार्ट सर. यस, आई विल डू इट फॉर यू. 1/3 आई विल रिपीट इट फॉर यू आफ्टर, मतलब you may say after the break when we'll come, or at the end of this lecture I will cover that. There's no problem, because I would not like to stop my this lecture. Then I will like to cover 1/3 part also. There's no problem. Many students have sent clear, so this is good to see, but all has not sent. All has not sent. So लिखना भी महंगा पड़ रहा है हमारे बच्चों को. देख लो करवाने वाला कितना लिख रहा है, आप नहीं देख रहे हैं. आप लोगों को लिखना महंगा पड़ रहा है, गलत बात है. आप लोग इतना तो लिख के भेजो नहीं क्लियर हुआ या क्लियर हुआ, so that I can understand बेटा. So coming to this concept, if policy amount is greater than or equal to value of stock lying in godown, then full claim of loss of stock will be made. Otherwise, average close method is to be used. If total goods are destroyed, total goods oblique stock is destroyed, then claim is equal to amount of policy. For example, in the previous question, if loss is of rupees 3 lakh, if all the goods are destroyed, that is 3 lakh, then claim is equal to 2 lakh because the policy amount is 2 lakh in second case. In first case, it is 1 lakh, then the claim will be equal to 1 lakh. Then there is no need of using average close beta. Average close is used when there is a difference between the stock as on the date of fire and stock destroyed by fire, because in that case we have to take proportionate claim. Otherwise, you may claim the total amount of policy, whatsoever is there. So in the previous case, here, if goods of rupees 3 lakh are destroyed out of 3 lakh, then there's no need of using average close because the formula will be 3 lakh divided by, in that case, formula will be, I should write it on the next page. It will be better for you. It will be 2 lakh amount of policy divided by 3 lakh value of goods lying in our godown as on the date of fire into loss of stock 3 lakh. So the answer will automatically come 2 lakh. The formula is policy amount. This is insurance claim divided by stock in godown or total stock, we may write, into value of stock destroyed. This is net stock destroyed. Net means after deducting salvage value, after deducting whatever the stock left. इंश्योरेंस क्लेम का रिवाइज करवा दो सर. इंश्योरेंस क्लेम का रिवाइज करवा दो सर. इंश्योरेंस क्लेम तो बेटा करवा ही रहे हैं. विकास, प्लीज टेल मी व्हाट इज द डाउट. गुड, वेरी गुड, वेरी गुड. सो दिस इज क्लियर. इसको एक बार रिवाइज कर लेते हैं. बातों बातों में मुझे लगता है कि आप लोग थोड़ा सा इधर उधर हो गए हो, तो हम लोग एक बार रिवाइज कर लेते हैं. इसके लिए फर्स्ट ऑफ ऑल यू हैव टू गो इनटू द just revise it. Stock as on the date of fire is 60,000. Amount of policy is 15,000. I have taken a policy of rupees 15,000. But when the stock is destroyed, as on date, how much stock was lying in the ground? It is 60,000. And salvage value of stock is 50,000. Means we have saved stock worth rupees 50,000. So how much is actually destroyed? Only rupees 10,000. But the company says that you must have to take policy worth rupees 60,000 if stock is lying in your godown worth rupees 60,000. You can't take the policy less than the amount of stock lying in our godown. In that case, company will have to suffer a loss because company is charging premium on the basis of the policy amount. You have taken a policy of rupees 15,000 and you are claiming stock destroyed out of 60,000. even it is destroyed worth rupees 10,000 only, but company is not going to pay you 10,000. Company will pay proportionate. Company says your stock is not fully insured because you have not let your stock fully insured. You have made a partial insurance. So how you will have to claim in this case? Let's do it. In that case, tell me how much will be the claim. First, you have to calculate beta. कब एवरेज क्लोज यूज करना और कब नहीं करना कैसे पता चलेगा? We have to use average close whenever policy amount is less than the value of stock lying in the godown as on the date of fire, just like in this question. See the question logically. Here stock as on the date of fire is 60,000, but policy amount is 15,000. Now this is not a point of consideration that how much stock is salvaged, saved, or destroyed. That is not a point of consideration, beta. Point of consideration is only and only that we have to compare policy amount with the stock as on the date of fire, beta. So policy amount is 15,000, stock as on the date of fire is 60,000, which is not logical. So if it is not logical, if it is wrong, if you have taken make an under insurance, this is called under insurance. When the policy amount is less than stock as on the date of fire, this is called under insurance. When there is an under insurance, we must have to use average close, beta. We must have to use average close, beta. Get the answer fast. Answer calculation will be done as very simple. First of all, we have to take policy amount divided by stock as on the date of fire into actual loss of stock. So this is your answer. Very good, beta. Very good. Number of students have sent. Claim is 10,000, sir. No, beta. Claim will not be 10,000. Claim will be 2,500 only, because company is not going to pay full claim. Company says when you have taken the policy from me, then you have divided your stock into two parts. You says I have taken policy of 15,000. So whatever stock is lying in your godown, company assume that this is insured. Company assume that this is insured and this is uninsured. Now we can't bifurcate these two. So company takes an assumption that whatever the total stock is lying with you, you have taken insurance of 15,000 out of 60,000, that is 1/4 as insured and remaining 3/4 as uninsured. So whenever loss will occur, whatever the amount of loss will be there, company will pay only 1/4 of that, because only 1/4 part was insured and remaining 3/4 part was uninsured. That company will assume. This is a policy of company, beta. I am not making it. I am not doing it. Logic is behind this, that you have paid premium for 1/4 of the total amount of stock lying in your ground, because you should have to take a policy worth rupees 60,000 if you are going to get your stock fully insured. If you have kept your stock partially insured, beta, then company can't pay you the full premium, full claim. Is that clear? What if on date of fire we don't know the value of stock, as a record of stock also get destroyed by fire? Very good question by Vijay Gori. Just after the break we will solve your query, because this is a very good query and we have to it include many questions. We have to do it. Okay, sir. Now got it. Very good. So illustration number 1 is there. So better after break we have to do it. Sir, So next is illustration number 1 of your module. In that we have to calculate the value of stock as on the date of fire, as on 31st of March 2012. Actually, someone was asking a query that how to get the stock if stock is destroyed by fire, how to get the stock as on the date of fire. So that is to be solved in these questions, because we would like to understand all that in these questions. And one more query was there, Pratyanshu. I'm getting your queries, beta. Don't worry. You have asked a query regarding hire purchase. Actually, I have left hire purchase for some time. I will cover your query only 15 minutes before the exam, before this session, 10 to 15 minutes before completion of this session. That is at the end of this session, I will like to cover your query. If you have any query. Okay, beta. So let's do illustration number 1, beta. From the following information, you have to value the stock as on the date of 31st of March 2012. Opening stock is given to you, purchases are given to you, manufacturing expenses are given to you, selling expenses, administrative expenses, financial expenses, and sales are given to you. So is it your modules illustration number 1, beta? Check it out. I'm just checking whether it is your modules illustration number 1 or somehow different. Yes, it is modules illustration number 1. So it's good because it is given in your module. So you can easily read read illustration from there also. Okay. Just a moment. So let's understand this thing first, that how to get the value of stock as on the date of fire. Before doing this illustration, I would like to give you an understanding regarding the logic. Beta, what happens when stock is destroyed by fire or when fire occurs? Then normally books are also destroyed in fire. That we assume. How to get the stock? Now, how to get the stock? For that, you should have to go for the accounting equation. What was the accounting equation, beta? There was a accounting equation. It tells us if we are interested to get the GP, this is equal to opening stock plus purchases plus direct expenses, which is to be deducted from sales and closing stock. Means you have to make sales plus closing stock. Sales plus closing stock. Out of this, you will have to deduct opening stock, purchases, and direct expenses to get the GP. Or in other words, you can say what we can do: sales minus COGS. That is also equal to GP, beta. And in other words, you can say COGS is equal to opening stock plus purchases plus direct expenses minus closing stock. This is equal to COGS. So these concepts should be clear to you. COGS is equal to opening stock plus purchases plus direct expenses minus closing stock. So these are the equations with us. If you are interested to get closing stock, then what we have to do? We may use any of the equations given to us because it will be all depending upon the information given to us. Now, how to arrange these informations? To get closing stock, you should have to arrange sales, direct expenses that we have done to get the GP. If we are interested to get the closing stock, what do we have to do? Closing stock is equal to you may take closing stock, keep closing stock here and take these two other one. So say GP plus opening stock plus purchases plus direct expenses minus sales. So that you may do. Now it means for you need GP. If you are interested to get CS closing stock, you need your GP, you need opening stock, you need purchases, you need direct expenses, you need sales. Now let's understand this thing. If some information is available with us in our business as books are already saved, then there is no problem. We can easily get all the information from there. Second option, normally all accounting is done through softwares like Tally, Busy, Marg, Genius, QuickBook. There are a number of hundreds of softwares that are used in India, SAP. So you may extract it from the company. You may tell to the company that on this date our stock is destroyed, our goods are destroyed. You may please check it out if that data can be extracted from them through cloud based. So they may also help you. Third thing is you may have to take backup of your accounting software on regular basis. Preferably at the end of every week, you should have to take backup. If you have taken backup, obviously that backup is available. There's no problem at all. You may use that backup, and that backup always lies on Google Drive. Google Drive is available in all over the world. So there's no problem at all. You may extract this data from anywhere in the world. These are the latest technologies, what I am saying to you. Cloud-based system, Google Drive-based system, backup system. So all these systems are normally used in routine now a time. Now a time, other system is if these informations are not available in this way, then how you will get it out? Now you will have to check the previous year balance sheet. In the previous year balance sheet, you will check it out, the closing stock of previous year. Whatever is the closing stock of previous year, you may take it as an opening stock of current year. You may get the GP rate of previous year. Last year GP rate will be assumed as same in the current year, or it may be assumed that it has been fluctuated. That is normally pre-planned. If there is a expectation of any fluctuation, it is going to increase or decrease. That is normally known to us. So GP rate is normally available with us. That can be easily calculated from the last year balance sheet. Last year balance sheet is available with the chartered accountants, with the income tax department, with the GST department, wherever you have lodged it. जहां पर भी आपने इसको लॉन्च करा है, अपलोड करा है, वहां से आपको मिल जाएगी लास्ट ईयर बैलेंस शीट, लास्ट ईयर प्रॉफिट और लॉस अकाउंट. You may get it from your CA, whomsoever is the chartered accountant, he must have this. You may get it and calculate the GP rate, calculate the closing stock, from where you will get the purchases and sales. So purchases are available at your GST portal. Now a time, whatever purchases are made by you during the previous period, that is available on your GST portal in GSTR 2B. There is a GSTR 2B in which this is available. Talking about sale, this is also available in GSTR 1. That is the GSTR 1 already uploaded by you on your GST portal. So this is available there. There's no problem. Direct expenses, if it includes some GST expenses, that is also available on GST portal. If it includes some expenses which are not GST based, then those expenses can be estimated through the previous year profit and loss account and balance sheet. Profit and loss and balance sheet last year profit and loss and balance sheet will help you to check it out, whatever is the proportionate expenses you are incurring or whatever is the routine expenses you are incurring, you may check it out and take it. So this is a practical aspect running now a time, which I am telling you. But in your module it is not given, because module is giving the questions which are about 20 years back or 30 years back. Same questions are repeating every year. So in that, this type of concept will not be there. I am just telling you the practical concept, because in future you will have to work practically also. So coming to your module will do in different way. GP rate from last year balance sheet, opening stock from last year balance sheet, that is always equal. Purchases and sales are normally given to you by them. They will himself give you. From there, where they have obtained it, that is their headache. So they will get it and give it to you in your question. You may easily do it, then there's no problem at all. So these equations you must have to note it down. This information you must have to note it down, because this is the most important point which I have discussed with you. No one will tell you these things. If you have noted it down, I would like to go for the illustration. In this illustration, he has given you the information. Opening stock is given to you, purchases, manufacturing expenses are given to you. Same in your module. Selling expenses, administrative expenses, and financial expenses, sale is given to you. At the time of valuing stock as on 31st of May 2001, जब भी ये हमने ओपनिंग स्टॉक वैल्यू किया, इसमें हल्की सी एरर है मुझे लगता है, बिकॉज द ईयर मेंशन्ड इज 31st of May 2012. Yes. So just you have to understand this thing, that this opening stock worth rupees 28,500 is given to you. In this he says a sum of rupees 3,500 was written off as a particular item which was originally purchased for 10,000 and was sold during the year for 9,000. Barring this transaction relating to this item, the GP earned during the year remains same, that is 20% on sale. So actually this type of questions will come into your exam, in which he will talk about some abnormal items, or those items which are, you may say, not giving that much amount of profit, whatever profit we are expecting in routine. So how to solve these type of questions? Actually these items are also lost by fire, so we have to claim for them also. So what we have to do, you may better go and prepare a pro forma of memorandum trading count like this. I would like to give you another method, because whatever method is given in your module, that is also good, but I would like to go it by my own method, because that method will help you to do each and every question without any stress. This is the memorandum trading count method. One is abnormal goods, second one is normal goods. I'm just giving you the concept yet. I'm not solving a question only, because concept is more important. Once you will understand the concept, you can solve each and every question. Memorandum trading count. Particulars. Normal. Abnormal. Particulars. Normal. Abnormal. So two types of goods are there. We will keep them separate whenever we have to calculate the closing stock, you know it very well, we have to prepare trading count. So this is named as memorandum trading count, meant for this is not prepared in that way, in that manner, whatever we are using in trading count, because this is not a final account system. This is just a calculation which is done through the use of trading count. Hence it is named as memorandum. So memorandum trading count, this will be the way how you will can present it. First of all, enter the amount of stock to opening stock. Now in opening stock, he has specifically mentioned you, it includes goods worth rupees 3,500, goods worth rupees 10,000, which were written off by rupees 3,500 as on 31st of March 2011. So let's understand it. In working note, opening stock which is given to you is rupees 28,500. He says minus, add back कर देंगे इसमें whatever is written off abnormal item. Whatever abnormal item is written off out of it, that will be added back. He have written off 3,500 out of it while valuing the closing stock last year. So it means for actual value of the stock was 32,000, out of which some were normal and some were abnormal items. Abnormal items are worth rupees 10,000 and normal items are the remaining items, that is 22,000. That it meant for. Don't go by the method whatever is given in your module, because I would like to give you the concept. That concept will be helpful to solve each and every type of question whatever will come into your exam. So opening stock is 28,500 beta. In this, 3,500 has already been written off while valuing the stock as on 31st of March 2011. So I have added it back to get the total value of stock, total opening stock. Now out of that, normal items are worth rupees 22,000. He says no, abnormal item is worth rupees 10,000. So you have to write here 22,000 and this is 10,000. Now he says we have made purchases worth rupees 1,52,500. Even it may include some abnormal items in number of questions. If such type of case will appear, you will have to bifurcate it between abnormal and normal items, because questions will be of any type. Then direct expenses are there, manufacturing expenses 30,000. It will not have any impact on abnormal item in any question. So 30,000 is the manufacturing expenses. By sales, this is working note number 1 which has been used for is working note number 1. Now he says out of these goods worth rupees 10,000, abnormal goods worth rupees 10,000 were sold for rupees 9,000. So he says these abnormal items are sold for rupees 9,000 during the year, which is included in your total sale. So total sale is worth rupees 2,49,000, which include abnormal sale worth rupees 9,000. So normal sale is 2,40,000. Is that clear, beta? Administrative expenses, selling expenses, financial expenses, thrice are indirect expenses, hence not taken into consideration while preparing memorandum trading count. So leave these three. Then he says, barring this transaction relating to this item, the GP rate is 20%. So 2 GP. He says, if you will leave this abnormal item, GP rate is 20% on normal items. So GP is 20% of normal items. Normal sale is 2,40,000. Obviously, GP is 20% on it. It is 48,000. And he says there is no such GP on abnormal items. So there is no worry about it. GP is entered here. Get the balance figure. That will be your closing stock. In this case, in normal goods, what is your closing stock? Get it out, beta. $22,000. plus 1,52,500 plus 30,000 plus 48,000 minus 2,40,000. It is 12,500 beta. So your closing stock is 12,500. Here no item have been left. Abnormal item is completely sold off. It means for there is only a gross loss of rupees 1,000, which is not considerable for us because we are not here to calculate the loss or profit. We are here to calculate only the closing stock. So it doesn't have any impact on closing stock. So there is no worry. But in number of questions, this type of event will be there that some partial part of the abnormal goods are sold and partial is left. Assume in this case, if 50% of the goods are sold off and 50% is left, then you have to take by closing stock 50% of 10,000, that is 5,000 will be taken here, because in that case the value of abnormal goods can be easily calculated in this way. So it will be 5,000 that will be taken here as a closing stock, and whatever is a balance figure, that will be gross profit or gross loss in case abnormal item is not sold in full. It may come into your closing stock. In that case, it will be easy to get it. So tell me one thing, is this easy or whatever is given in your module? This will be easy and this will be understandable if you will have to do each and every question with this method. If Vijay has a question, if the business started and incorporated in same financial year and fired in Godown in same year, started newly business and get fired in the same year, so it was difficult to get previous year balance sheet. Obviously, when a person is doing a business, then he must know that how much profit I am expecting to earn on my sale. He will give his estimate that I am expecting that this business will give me a profit of 20% or 10% on sales. We will take that as a base. There's no worry, we may take it. Just we have to give a concept, that give a logic that such type of businesses easily earn 10% or 20%, but I am expecting in the first year. So that will be taken as a base beta. May I use this method in exam? 100% beta इसीलिए मैं करवा रहा हूँ. This method is for your exams. Many, I have actually studied more than 20 or 30 books even. But your module is one book only. So I am giving you the concepts from those 20 and 30 books. Exam में आपने करना क्या है? You have to do that method, use that method in exam which is presentable, which is giving correct answer, which is giving answer with a logic. So there's no problem, you may use any method. There are two methods used in insurance claim. One is this one, and second is whatever is given in your module. Both methods are okay, there's no worry, but this will help you to solve each and every question in a very simple way and with a logic. Yeah, repeat again, let's understand it once again. First of all, opening stock is given to you beta. Now what is the amount of opening stock? 28,500. That is given to you. Now he says, read the line given to you. At the time of valuing stock on 31st of March, a sum of rupees 3,500 was written off, was on a particular item which was originally purchased for rupees 10,000. It means for 3,500 has already been deducted out of this opening stock or the closing stock last year. After then the amount of 28,500 is resulted, because he says was written off. Was means जो हो चुका है तो वो कर दिया गया हुआ है. So I have treated it, I have brought back it to the normal amount. First of all, इसकी total amount पे लेके आ रहा हूँ मैं वापस. I am bringing it back to the total amount by adding it back. 3,500 rupees has been added back. The total amount of stock is 32,000 before writing off abnormal item. Now I have bifurcated it between two items. He says it include an item worth rupees 10,000 which was assumed as a abnormal item, because we are expecting that this item will not give that much amount of profit, whatever we are expecting from the other sales. If we are expecting that this business, this item will not give us normal profit, then obviously that is called abnormal item. So that has been bifurcated. 10,000 is abnormal, balance is normal. I have kept themselves separate in separate columns, 22,000 and 10,000. Then I have seen purchases that is given to you. If it include also some abnormal items, then it will be bifurcated between these two. Here it is not such case. Manufacturing expenses are given to you, take it. Sales is given to you. He says sales of rupees 2,49,000 includes abnormal sale of rupees 9,000. Sale of abnormal item worth rupees 9,000. So that has been deducted because we have to keep abnormal and normal separately. Why? Because we are going to apply GP rate on normal items, because GP rate is given for the normal items. So I've kept it separate. 2,49,000 minus 9,000 is normal. Then GP. How much is the percentage of GP that is given to you? 20% on sales that I have done, beta. Then we have calculated the closing stock as a balance sheet figure, and whatever is the low, because all the good abnormal goods are sold off. So whatever is the balance sheet figure of abnormal column, that will be a profit or loss on sale. That is 1,000 beta. How abnormal is 10,000? Because that is given in the question. See, here it is. Read the question, beta. At the time of valuing stock on 31st of March, a sum of rupees 35 was written off on a particular item which was originally purchased for rupees 10,000 beta. Afrin, that is given to you in the question. So I have taken it. What is the reason for goods being written off, sir? Actually, when we are expecting any loss in future, then we are recording it immediately, because you know the concept of conservatism approach or a prudence concept that tells us when we are expecting any loss in future, that must be written off now. Provide for all probable losses, never anticipate gains. That was the concept of accounting which is used in this case, beta. So we are expecting that this loss will occur in future. We are expecting that the goods worth rupees 10,000 will not be sold for rupees 10,000 in future. We are expecting that this will be sold for 6,500 in future. Due to that reason, we have written it off. Now, in the future, whatever is recovery, that is a separate issue. But as on 31st of March, when books are to be closed, we are allowed to write off. We are allowed to provide for all probable losses, whatever we are expecting, but do not anticipate gains. So how do you know that purchase of 10,000 is abnormal item? Because it is mentioned at the time of valuing stock on 31st of March, a sum of rupees 35 was written off on a particular item. If value of any item is written off, that is only due to the reason that it is an abnormal item, beta. So due to that reason, I have assumed it as abnormal item. If any item is written off, then it means for it's an abnormal item. That you have to also note it down with you. Sir, how you get 10,000 abnormal opening stock? Sir, how you get 10,000 abnormal opening stock? कितनी बार लिखोगे तो उससे क्या फर्क पड़ जाएगा? महंता, your method is easy. It is very easy. It is very easy, sir. How you get 10,000 milk? Beta, that is given in the question. I am telling you again and again, beta. Just see the question. At the time of valuing stock on 31st of March, which was originally purchased for rupees 10,000, that is given in the question, beta. Now, sir, explain about normal and abnormal. Those items which are giving us the normal profit or the profit we are earning in routine are called normal items. Those items which are not giving us the profit which we are earning in routine are called abnormal items. Likh lo, write it in with you. Those items which gives us normal profit, whatever we are expecting in our business, are called normal goods. Those items or those goods which are not expected to give us the normal rate of GP are assumed as abnormal goods. Exactly, beta. Ankur, you are 100% right. Selling financial administrative expenses are to be entered in profit or loss account. So these are not taken while calculating GP. And for closing stock, we have to only consider GP concept, because closing stock can be calculated easily in memorandum trading account. So there's no need of doing extra work, because for that we have to prepare profit or loss account, and that is not required at all. We need only closing stock, because we have to claim only the closing stock. Why GP is on normal sales only and not on abnormal sales? Because this meant for abnormal, beta. बच्चे फेल क्यों होते हैं? बच्चे पास क्यों होते हैं? वो कहते हैं वो पास हो गया, वो फेल हो गया, ये डिफरेंस क्या है? पास होने वाले नॉर्मल मान लिए जाएं और फेल होने वाले एबनॉर्मल मान लिए जाएं, वही मीनिंग हो गया। मतलब ये तो एक वे ऑफ प्रेजेंटेशन है, कहने का एक तरीका है कि एक पर्सन जो है जिसके कोई प्रॉब्लम है वो एबनॉर्मल हो गया, जिसकी प्रॉब्लम नहीं है वो नॉर्मल हो गया। ये तो आइडेंटिफाइड है, ये तो क्लियर है, यहाँ पर दे ही दिया उन्होंने। बहुत अच्छा लिखा है मिलन ने, बहुत लंबा चौड़ा लिखा है। इतना मुझे लगता नहीं, मैं पढ़ नहीं सकता, बहुत बार लिख दिया उसने, 10-12 बार लिख दिया। हाँ सर, वैल्यू ऑफ क्लोजिंग स्टॉक ऑफ एबनॉर्मल स्टॉक is also get added in normal stock if the closing stock of abnormal is given for calculation of claim. Exactly beta, I would like to take an illustration for that also. In this illustration I can let you understand this concept कि if only 50% of these goods are sold, then obviously we will take 5,000 as the value of closing stock of abnormal goods and claim 12,500 plus 5,000 as the value of total goods lying in our godown as on the date of fire. But it is not written as abnormal item for 10,000. Beta, whenever any item is written off, or this is mentioned that this item will not give us that amount of GP, whatever we are expecting from other goods. He has already mentioned, read the last line, barring this transaction relating, barring the transaction relating to this item, the GP earned during the year was 20% on sales. Last line of the question, barring the transaction relating to this item, the GP earned during the year was 20% of sales. Beta, here it is. He has already mentioned, barring this transaction relating to this item, the gross profit earned during the year. He has already mentioned that this transaction of goods sold during the year doesn't give us the normal GP. If any transaction, if any item doesn't give us the normal GP, then that will be assumed as abnormal. That you have to note it down with you. Okay, beta. Sir, your method is too much easy as compared to ICA module. What is the meaning of barring, sir? Barring means इसके अलावा, इसके अलावा, बारिंग दिस ट्रांजेक्शन, अगर इस आइटम, इस ट्रांजेक्शन को छोड़ दिया जाए तो बाकी ट्रांजेक्शन जो है वो हमें नॉर्मल जीपी रेट दे रही है। बारिंग का मतलब इसको छोड़ दिया जाए, छोड़ना। सो आई अज्यूम दैट दिस मेथड इज इजी एंड अंडरस्टैंडेबल फॉर यू। लेट्स कम टू इलस्ट्रेशन नंबर 3 of your module. If you think that my method is easy, give good feedback in ICI. Like the video, share the video with others so that others can also get benefit out of it. बेटा देखो, ये हमारी रिस्पॉन्सिबिलिटी है, दिस इज अवर रिस्पॉन्सिबिलिटी टू लेट अदर्स गेट द बेस्ट। अब बच्चे कोचिंग लेते हैं, सब कुछ करते हैं, बट फिर भी उनको कंसेप्ट अगर वही करवा दिया जाए जो टफ है, जो डिफिकल्ट है, तो फिर फायदा ही क्या हुआ स्टडी करने का? इफ यू आर स्टडिंग हार्ड देन यू कैन not get good marks. If you are studying with a logic and with easy technique, you can easily get good marks in your exams. I remember that when I am studying for only 2 to 3 months before the exam, and I'm getting very good marks just due to the reason I am going for the logics only. At the time also I was teaching, so obviously concepts are very much clear. So on 20th of October, the godown and the business premises of Aman Limited was affected by fire. From the salvaged accounting records, the following information is available. So on 20th of October, beta, godown and business premises were affected by fire. Stock of goods at 10% lower than cost as on 31st of March 2011. You know what it is? This is another thing which come to us. He says the complete stock is valued at 10% lower than the cost. This is just like provision for doubtful debts. We have assumed that there may be some items which may be abnormal, but we doesn't know them. Hence, we have reduced our stock by 10% directly. But for calculating proper value of our closing stock, we can't take undervalued stock. We need stock of the total value at the normal value. So we will not take it as 2,16,000. We will take it as 2,16,000 into 100 by 90 to get the total value of stock, because stock should be at the proper value to calculate the proper value of closing stock. So opening stock should also be correct. This is not the abnormal value of stock. This means for that he has created a provision on the stocks, just like we are creating provision for doubtful debts at the rate of 5% on our debtors. Why? That we are expecting that maybe 5% of the debtors may not give the payment. Hence we have created a provision on them. In the same way, we have assumed that 10% of the stock may not give us that much amount of profit which we are expecting for normal goods. So due to that reason, he have done it. Purchases less returns given to you. This is for the period 1st of April to 20th of October. See here it is. Date of fire is 20th of October 2011. We have to calculate stock as on the date of fire. Note it down with you, beta. On which date you have to calculate the stock? You need date of fire first, 20th of October 2011. So stock is to be calculated for this date only. He has given us the opening stock on 31st of March 2011. That means for this is the opening stock for the current year. Purchases from 1st of April to 20th of October means 1st April से लेकर 20th October तक की purchases उसने दे दी. We can prepare the account or we can calculate the closing stock on the basis of this because purchases for this period is given to you. Opening stock, date of opening stock to the date of fire. That we requires. What we require? We requires all transactions or values of purchases, sales, direct expenses from the date of opening of books of accounts to the date of fire. So he has already given it to you. Purchases, sales from 1st of April to the date of fire. Additional information, sales up to 20th of October include goods worth rupees 80,000 which are not yet dispatched. Means these goods are lying in our godown. These goods are lying with us. These are not yet dispatched. If fire occurs, then obviously these goods will also destroy. Let it be very much clear. These are goods lying in our godown. Goods sold but not yet dispatched. So these are lying in our godown. Very important point. Purchases up to 20th of October didn't include goods worth rupees 40,000 for which invoices has not been received from supplier, but goods have been received. He says that we have goods worth rupees 40,000 in our purchases, in our godown, but these are not included or added in our purchases. But we should have to add it because these goods are already received by us. So these are to be added because these will destroy otherwise. Obviously, while calculating the stock as on the date of fire, these 40,000 worth of goods must be included. So these 40,000 goods are also lying with us in our godown as on the date of fire, but these are not in our purchases. These 80,000 worth of goods are also lying in our godown as on the date of fire, but these are not. These are included. These are included in our sales. So both the goods will increase our closing stock. Concept should be there. Logic should be there. Whether they are increasing our stock or decreasing our closing stock. So this 80,000 will increase our stock because these are not sold yet. These are not delivered yet. We can say sold to hogi, but deliver nahi hui. If these are not delivered, these are lying with us. But this is the value of sales. And these purchases worth rupees 40,000 are also lying with us in our godown, but these are not included in purchases. So GP rate is 25%. Value of goods saved is 31,000. Policy of fire insurance is taken or policy of stock is taken for rupees 1 lakh. You have to calculate the claim to be low to insurance company, beta. Let's do it. Let's do it. What some students have asked a few queries. I would like to give answer because those are relating to illustration number 1. What if the transaction have effect on GP? Don't worry, beta. These types of question will come. We will understand that. Sir, in illustration number 1, explain about ninth on abnormal sales, please. Beta Manoj Kumar, ninth on abnormal sale is given to you in your. This is given in your question also. You may see the question also. Here it is mentioned to you. These goods worth rupees 10th on was sold during the year 4 rupees 9th on. So if these are sold during the year 4 rupees 9th on, obviously these are included in this sale because nothing else has been mentioned. So this is the total amount of sale of rupees 2,49,000 on. This includes sale of rupees 9,000 also, beta, because he says sale of rupees 9,000 is made during the year. So I have done, I have kept abnormal sales separately. 9,000 is kept separate. Now out of total sale of 2,49,000, 9,000 is abnormal, remaining is normal. So I have deducted it and get it. Very simple. Sir, what if that transaction has effect on GP? Doesn't matter, beta. We should have to keep abnormal items separately. Whatever is the GP rate on it, whatever is the effect of it, that will be kept separately. We will keep normal separately, abnormal separately. Opening stock 2,40,000. Sir, can you please explain the concept of proportionate insured? Exactly, we will do, beta. In this question, we will do it. Why we calculate by 100 by 90? I will explain to you, beta. Sir, your method is given in this question to prepare memorandum trading account. Very good. दिया वो मैं भी पढ़ लेता हूँ, मुझे भी अच्छा लगेगा. आपने एक अच्छी बात कही है तो सुन लेते हैं. यहाँ तो नहीं लिखा हो बेटा, कहीं और देखा होगा आपने. चलो, let's do this. Once you will understand the concept, you will be able to do each and every question. There is no worry, beta. आपको कंसेप्ट से पढ़ा दिया जाएगा ताकि आपको कभी दिक्कत ही ना आए. और practically we are basically doing questions for the purpose of actually calculating the claim from the company. Once you will understand it practically, it will be really easy for you. Memorandum trading count, particular, normal, abnormal, particulars, normal, abnormal. So let's start with it. First of all, he says that goods worth rupees 2,16,000 were in opening stock. About this, he has clearly mentioned that this is after writing of 10%. 10% lower than the cost as on 31st of March, 2,16,000. We should have to take it at normal price. Why? Because we are going to calculate the normal calculation. Actually, company doesn't allow us to calculate abnormal items in this way. Company allows us only to calculate each and everything in a genuine way, because we have to make a claim to the company. So we have to go according to the policies of companies. So let CP is equal to 100 minus written off. 10% is written off. So the value is 90. After writing off. So after writing off, value is 90. Before writing off, it was 100. Unitary method is to be used. 100 by 90 into 2,16,000. Whatever you have to calculate, keep it in numerator. Whatever is given to you, keep it in denominator. So this is the value you are interested to calculate. This is the value given to you. So my method is very simple. This is unitary method, and this is used in this way. If value after writing off is 90, then before writing off or cost price is equal to 100. If value is 1, then before writing off or cost price is equal to 100 by 90. If value after writing off is 2,16,000, then how much it will be? It is 2,40,000. It is 2,40,000 beta. Is that clear? So this is all normal in this case. Even in this case, maybe no abnormal item is there in the question. So I have prepared the pro forma, but it is not required at all. This column is not required in this case. होता क्या है कि जब हम लोग पढ़ा रहे होते हैं ना तो माइंड में कई बार बात कुछ और आ जाती है, तो इसलिए दिक्कत हो जाती है। यहाँ पर तो अमाउंट ही लिख लेंगे। Here you may write amount beta. So to opening stock, it is 2,40,000 beta. Talking about purchases, purchases is 2,80,000. Anything is mentioned regarding purchases? Yes, he says purchase worth rupees 40,000 are not included as bills are not yet received. But while calculating purchases, while making entry of purchases, you should have to calculate it. You should have to enter it beta. So your purchase is not 2,80,000, but it is worth rupees 3,20,000. Goods received but not entered. We have to enter the total sale as a normal. Whatever the total sale is given to you, total purchase is given to you, that we have to enter. वही हमको enter करनी है, कुछ और नहीं enter करना. So what is the sale? 6,20,000, out of which he says 80,000 worth of goods are not yet dispatched, but these are sold off. These are sold off. इनको हम बेच चुके हैं, इनको हम सेल कर चुके हैं. So this is worth of is 620 minus 80 minus goods not yet dispatched 80,000. So actual sale is 5,40,000. अभी तो गुड्स ही डिस्ट्रॉय होगी, अब कहां से हम लोग डिस्पैच करेंगे? तो उस पर प्रॉफिट अर्न करना गलत हो जाएगा. अगर हम कहते हैं कि उस पर हमने प्रॉफिट अर्न किया, दैट इज प्योरली रॉन्ग. जीपी रेट इज गिवन टू यू 25%. 2 GP 25% of 5,40,000. 1,35,000 maybe. Yes. Okay. Institute IC module has also solved this question by this memorandum method by closing stock as a balance sheet figure. So this is your answer, beta. Opening stock 2,40,000, very good. GP, very good. Clear, sir. Insurance claim is 80, very good, beta. Insurance claim, we will calculate it. Just wait. Do we have to consider the ownership of goods lying in godown while calculating? No, beta. That is not a point. The point is only one, that whatever goods are lying in our godown, that must be taken in our stock as on the date of fire, because fire has occurred and we need claim for that. Yes, one thing should be there. If goods belongs to someone else, then even then we have to pay, get claim for that also. There is no problem. If there is a separate insurance for that, that is a separate issue. Otherwise, no such thing will be there. So in this case, total closing stock is 1,55,000. But he says salvage stock is 31,000 and policy is 1 lakh. So next statement of calculation of actual loss of stock. Particulars, detail, amount. Must write currency also because currency is always required. Value of stock as on the date of fire. One lakh 55,000 minus stock salvaged 31,000. There may be stock saved also. There may be something else also that is to be added here, and final amount will be brought outside. Whatever is the balance, 1,24,000 actual loss of stock. Now policy amount should be 1,55,000 or more, as we have the stock as on the date of fire is 1,55,000, but policy amount is, so claim amount of policy is 1 lakh. So policy is less than stock on the date of fire. Average close is to be used. Which tells us that claim of rupees 1 lakh will be received if total goods of rupees 1,55,000 is destroyed, but goods destroyed worth rupees 1,24,000. So get the amount of claim, how much it will be. Because there is no abnormal item in Parampreet, in this question there is no abnormal item. So 80,000 is the amount of claim. Very good. Very good. Mr. Ankur Patil, less. I am not clear what meant for less. Explain the GP rate in illustration number 2. No matter, we will do it better. According to my opinion, I have taken all the queries of all the students except one or two queries of hire purchase that I am going to take now. Before that, a student is asking regarding GP rate in illustration number 2. That I may take tomorrow. It's better because I would like to give you an offer that you should have to do all the questions of loss of stock, whomsoever are given in your module, must do all the questions of your module. I would like to see, is there any tough point given in illustration number 2? Yes, illustration number 2 is somehow important. GP rate is given to you 33.33% beta on cost. Okay, this concept is normally not known to number of students, that how to get GP on cost, how to GP on sales. So no matter, I would like to explain it for you for a minute. Now in shortcut, I would like to explain. Here in illustration number 2, he have mentioned that GP rate is 33.33% on cost beta. So it is 33.33% on cost. That means for 1/3 of cost. So if it is 1/3 of cost, then it is 1/4 of sales. How it occurs? Let CP is equal to 100. On which percentage is given, that will be assumed as 100. Percentage is given on cost. So cost is taken as 100. If cost is taken as 100, profit is to be added in it. If sale is taken as 100, profit is to be deducted from it. So profit is added 33.33%. So after adding profit in cost, what you will get? Sale price, that is 133.33. Now what you have to calculate? You have to calculate profit. Profit is profit on sale, because in the given question, cost is not given to you. You have been given sale. So whatever is to be calculated, that is to be taken in numerator. Whatever is to be calculated, that is always taken in numerator. Whatever is given to you, given for calculation, जिसके ऊपर calculation करनी है हमने, whatever is given for calculation, that will be taken in denominator into given amount. So it means for it is 33.33 divided by 133.33, which is equal to 1/4 of sale. So that I have already explained to you. If GP rate is, or any profit percentage is 1/3 of cost, it will be 1/4 of sale. If it is 1/2 of cost, then it is 1/3 of sale. Always it will be. If anything is 1/4 of sale, it is 1/3 of cost. If it is 1/5 of sale, it is equal to 1/4 of cost. Means while going from sale to cost, you have to reduce 1. While going from cost to sale, you have to add 1, because you know it very well. Profit is added in cost to get the sale price, and profit is deducted from sale price to get the cost. So that is the way how you are using it. Sir, but at the time of fire, sales goods were present in ground. Why can't we add the goods value? We have added it better. Just see. We have done it ना, ये देखो. We have added it. When we have deducted it from sale, it means for it has been added in stock. You may see here it is. If it is taken as 6,20,000, if it is taken as 6,20,000, obviously closing stock will reduce. Here closing stock is automatically increased. See the impact. In purchase we have added auto, because it is in debit side, so it will increase the closing stock. Okay. When we have deducted it from the sale, it will automatically increase your closing stock. So it has been added, not deducted. This 80,000 is added in the way 80 minus 20%, 25%, that is 20,000. So net 60,000 has been added in this, automatically added. This is done through memorandum trading account method, beta. Very good, beta. Very good. You have done it, Akashnil. Very good. So hire purchase, there was 1 or 2 students were asking about the problem in hire purchase regarding the last illustration which we have covered. I would like to cover that also for you. Once again, I would like to explain you. In this last illustration, the concept was very simple. The vendor agreed to allow him a credit for the amount paid against these 3 trucks less 25%. So no return down value method concept is there for the purpose of calculating value as per vendor. Vendor says, I will give credit of only the amount paid to me minus 25%. Wherever purchaser is interested to charge depreciation at the rate of 20% per annum. So I have done it for you. Yes, this I have done for you. No. This is done by me for you. He says that down payment of rupees 30,000 is received. Down payment of rupees 30,000 is received by the vendor because 70,000 is paid in total for 7 trucks. For 3 trucks, it will be 30,000 because we have to take value of only the 3 trucks. Simultaneously, we have paid first installment, which is 56,000 plus interest of rupees 7,000 maybe, if you will check it out. So what we have to take, we have to take only the principal amount that I have already discussed with you. Interest credit cannot be taken. Even it is not mentioned, but we can't claim interest even in that case because interest is a period expense or period income. It can't be claimed back. So 56,000 for 7 trucks. For 3 trucks, it will be 24,000. So total amount paid by purchaser to vendor rupees 54,000, out of which 25% will be deducted and the credit of 40,500 will be given to him. Whereas purchaser has valued it by deducting 20% out of the CP cash price of 3 trucks. That is 1,20,000. So 1,20,000 minus 40,500 is 79,500 beta. We'll send that beta. Someone is asking about the PPT to be sent on BOS portal. No problem. I'll send it. They will upload it. Any other issue, beta? So you have to do illustrations, you have to do questions, but whomsoever is related to loss of stock. But let it be very much clear, loss of profit is much more important than loss of stock. So first of all, do loss of stock and don't leave loss of profit. Also in the next session, we will go for loss of profit at an advanced level with some technical concepts in that. It will take even 2 lectures because that is very advanced. So even we will cover some advanced topics of loss of stock in the next session because the question which will come into your exam will be of different types. So I would like to cover all those questions in the next 2 lectures. So be with me in the next lecture. Share this video with more and more students so that they can be benefited. If you think that I have given you clarity in these concepts, give a good feedback. Okay then, thank you, beta. Sir, could we close the session? Sir, could we close the session?